Hello, everybody. My name is Lush Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending January 27th, 2023. Looking at the market indexes for the week, the TSX, Nasdaq, S&P 500, Dow Jones, and Russell 2000 were all up on the positive week. Gold and oil were both down. Turning to Canada, the Central Bank of Canada raised interest rates on Wednesday by 0.25% to 4.5% as expected, which raises variable rate mortgage rates and interest on lines of credit and credit cards. The BOC is continuing quantitative tightening as well, meaning they are selling the government bonds they had bought several years ago. This will have the effect of raising fixed mortgage rates. The stock market liked the press conference afterwards more when Tiff Macklem explicitly said the bank was done raising rates. The pause has come, and perhaps the legendary soft landing can still be had, or a very mild recession. In the US next week, will be raising rates as well. And if it raises rates more than expected, the US dollar will strengthen compared to the Canadian. Just to show it visually, this is the Canada and US inflation graph. It is widely believed we've seen the peak inflation already, with the US annual inflation rate falling to 6.5% 2 weeks ago. It wasn't a huge surprise to see Canada's inflation come in at 6.3% last week. That said, the news was certainly welcome. These inflation figures were down 7.1% and from 6.8% respectively. In my opinion, inflation has peaked and is moving lower, and I expect that to continue through 2023 and to fall below 5% by the second half of this year, but it will reduce at a slower rate than inflation has been coming down so far, taking much longer, especially once it gets below 4% on the way down to 2%. Several factors take the pressure off inflation, even as two important factors will keep the pressure on. On the positive side, shortages and supply chain problems are continuing to resolve. We have seen reduction in food, energy, and many other commodity prices over the last 6 months, and that is helping reduce broader inflation. On the negative front, wage growth remains elevated, even as the rate dropped a bit to 4.6% in the US last month, and that part of inflation will remain sticky. Nobody's going to work for less than they have been up until now. And the lower cost of housing have as yet to be fully reflected in the price indices, and I expect several months more of positive contributions to inflation from that source. Eventually, though, falling rental rates and declines in house prices will pull inflation lower in that area as well. As raising of interest rates slows as well, it is expected that the economy will slow in an orderly fashion. Unemployment in Canada could possibly increase from 5% to 6% or so, and demand for goods and services will slow, and wage inflation should slow correspondingly. As the supply chain issues have resolved themselves, we should see inflation come down further. We may get a modest recession, but nothing terrible. Two wildcards dominate the 2023 oil market outlook, which is concerning Canada. These are Russia and China, according to the International Energy Agency's latest monthly oil market report. This year could see global oil demand rise by 1.9 million barrels per day to reach 101.7 million barrels per day, the highest level ever, tightening the balances as Russian supply slows under the full impact of sanctions. China is set to drive nearly half this global demand growth, even as the shape and speed of its reopening from COVID-19 restrictions remains uncertain, the report says. Energy efficiency gains and booming sales of electrical vehicles will curb global 2023 demand growth by close to 900,000 barrels a day this year, the report adds, noting that measures like these are especially vital in a supply-constrained oil market. Since February 2022, the average price of a Canadian property dropped 13.2% to 730,000, the biggest decrease ever recorded. Prices fell because demand fell, and demand fell because mortgage rates and thus the cost of owning a home went up. Many experts expect mortgage rates to plateau or even fall from here. And finally, for Canada, the Federal Court of Appeal has dismissed the Competition Bureau's bid to overturn the decision from the Competition Tribunal to allow Rogers from buying Shaw. The Competition Tribunal allowed the purchase earlier. The Competition Bureau may choose to bring this one to the Supreme Court of Canada. Turning to the US, the US GDP quarter over quarter for Q4 of 2022 was 2.9%, better than the expected 2.6%, but less than the previous quarter's 3.2%. No US recession yet, but talk of a recession is building, although there are some who believe the US will avoid such a slowdown in 2023. And if we do experience a recession this year in the US, it could be light as consumers have remained resilient despite inflation and the job market also remains strong. Now looking at Microsoft, Microsoft's stock initially jumped after the company reported quarterly results. The stock was up 4% after hours, but the gains reversed after the company shared disappointing guidance on its earnings call. Microsoft is up 23% off the 52-week high and flat so far in 2023. Microsoft's Azure cloud growth slowed to just 31%, barely beating analyst projections, but still having phenomenal growth. The company beat on earnings per share as well. The management called for 50.5 billion to 51.5 billion in revenue for the next quarter, while analysts were expecting over 52 billion, with Azure growth slowing further. This was what softened the stock price after hours. The software maker took a 1.2 billion charge in the quarter in connection with its decision to eliminate 10,000 employees, revise its hardware lineup, and consolidate leases. Speaking of Microsoft, the legacy tech giant isn't in the news for job cuts and earnings. On Monday, it confirmed that it had indeed agreed to a multi-billion-dollar investment in OpenAI, the laboratory behind ChatGPT, the viral artificial intelligence program. Microsoft previously invested in OpenAI in 2019 and 2021, and OpenAI works closely with the company on its Azure cloud system. ChatGPT has exploded in popularity in recent months as its near automatic ability to generate text based on prompts has excited and rattled people over the prospects for an AI driven future, adding more fuel to the utopia versus dystopia debate. Staying with US companies, Alphabet's Google will be cutting 12,000 jobs, or 6% of its workforce, making it the latest tech giant to unveil significant job cuts. CEO Sundar Pichai told employees in a memo that the decision was based on a rigorous review of the company's business and that the layoffs would affect various regions and product areas. Quote, as an almost 25-year-old company, we're bound to go through difficult economic cycles, end quote, Pichai said. Google's announcement comes 2 days after Amazon started laying off 18,000 people and Microsoft said it would slash 10,000 jobs. So this is an ongoing trend with the US tech companies. For Google, it is a downturn in advertising its search is experiencing due to the expected economic downturn. At its town hall this week, Google CEO also faced questions about whether OpenAI's ChatGPT has outflanked the company's own AI initiatives. And finally, the US Fed will be meeting next week for an interest rate hike decision. A 0.25% rate hike seems to be expected in the markets, and then a pause. Finally, some bits and pieces. The current supply chains for critical mineral resources, mining, and production of clean energy technologies are highly concentrated geographically, says another International Energy Agency report. For solar panels, wind, EV batteries, electrolyzers, and heat pumps, the three largest producer countries account for at least 70% of manufacturing capacity for each technology, with China, orange on the graphic, dominant in all of them. For critical minerals, the Democratic Republic of Congo produces over 70% of the world's cobalt, and just three countries, Australia, Chile, and China, account for more than 90% of the global lithium production. Geopolitical events could be wildcards this year, although they are an unknown risk every year, as Russia's invasion of Ukraine demonstrated early in 2022. Iran's nuclear ambitions are another wild card, as are the demonstrations within Iran that could yet topple that government. China could surprise everyone with some action against Taiwan, although we think this is fairly unlikely. Kim in North Korea is another wild card. And those are just some of the more obvious known unknowns. The list of potential surprises is truly almost endless. We will have plenty to monitor as usual. Turning to next week, we are still in the middle of the US earnings season with Canada beginning. On Tuesday, we have Exxon, Samsung, Pfizer, McDonald's, UPS, Canadian Pacific Rail, General Motors, Imperial Oil. On Wednesday, we have Meta, Alibaba, Waste Management, CGI. On Thursday is Apple, Alphabet, Shell, BCE, Ford, Rogers, Brookfield Infrastructure, and Lightspeed. And finally, on Friday, we have Cigna and Brookfield Renewables. The economic events next week on Tuesday is the big one for Canada, where we get to learn about the Canadian GDP for the last quarter. We get US unemployment wages, consumer confidence, and on Wednesday we have US jobless claims, US Fed interest rate decision, which is the big one for the US, and on Friday we have US payrolls. That concludes my thoughts and observations for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.